Hey yo, what is going on, viewers of the tube? My name is Tyler and I'm the host of the crypto channel that feels like the KYC at some of these crypto exchanges goes a little something like this.
Hi, how's it going? You have to be 21 to sit at the bar. Do you have your ID on you? Cute. All right, what can I get for you?
You just have to wonder how many 12-year-olds are trading on Binance. You know our moral compass. It's time for Chico Crypto. Well, friends, enemies, army members, and those neutral folks who watch my channel, the moral compass of greed has never been greater in our world. Global economies, including the economy of the world's reserve currency, have been put into inflation overdrive, and the bailouts are coming. Like I mentioned last week, 6 days ago with this video titled Big Bailout Nears for who? Citizens or corporate USA? And in that video, I said the money isn't coming to the people first, it will come to the corporations, and we will get the scraps if there is any. And all that news about checks and stimulus directly to Americans let them sneakily do exactly that yesterday before the markets opened. The Fed announced unlimited quantitative easing in one of the most unprecedented moves in its history. So before getting into what the Fed just did, let's understand what they have already done. And to begin, we'll begin with repos, or the repurchase market. And that has been in the Fed's arsenal beginning in late 2019. It's been getting more frequent and larger throughout 2020, and then hitting peak levels by early March. Well, last week, the Fed announced they would be increasing it even further, $1 trillion a day in overnight repo loans throughout the month of March, and possibly even into April. And even before all these repos, the government and the Fed announced they would be slashing the Fed's fund rate to the 0% to 0.25% range, dangerously close to those negative territories we've been talking about. And they would be doing their first batch of quantitative easing, where they would be purchasing $500 billion in treasury securities and $200 billion in mortgage-backed securities. So last week, all the bailouts and QE announcements, they were for banks, hedge funds, pensions, and more. They are not for us at all. We have no access to any of these benefits or the cheap capital they are throwing around. It directly benefits the elite, the 1%ers. And like trickle down is supposed to work, we get the scraps that trickle down from these greedy mother truckers. Well, obviously the markets didn't like that, as the Dow had a horrible Friday last week. And over the weekend, there was a bunch of chat about a direct stimulus package coming for the American people. But the Senate couldn't come to an agreement, and the talks broke down. But the government, they needed to do something. So yesterday, they dropped the news of QE Forever, which includes buying treasuries and agency mortgage-backed securities. And according to their statement, in the amounts needed to support smooth market functioning and effective transmission of monetary policy. Which basically means they can buy as much as needed, which means printing as much as needed. But here is the sneaky thing they did. A corporate bailout. According to their statement, there will be the establishment of 2 facilities to support credit to large employers. The primary market corporate credit facility, PMCCF, for a new bond and loan issuance, and the secondary market corporate credit facility, SMCCF, to provide liquidity for outstanding corporate bonds. What the freak? This is not how capitalism and free markets work. These corporations, who failed, who made bad decisions, a large majority, fracking companies, should be allowed to fail, as we're not going to win this oil war. Fracking is dead in the water. It can't be profitable now, and it wasn't profitable before here in the USA. And this is just delaying the inevitable, creating another bubble which will pop. And who is going to be left with those crappy assets on their balance sheet? The Fed. They will now own all the corporate debt in America. As we can see from this swift explainer on the primary corporate credit facility, PMCCF, the Department of Treasury, using the Exchange Stabilization Fund, will make an initial $10 billion equity investment in the SPV, or Special Purchasing Vehicle, in connection with the facility. And then from eligible assets, they need to be rated as BBB- or above. BBB minus means it's barely above junk status. And guess which companies are a large majority BBB minus, barely holding on to their non-junk bond status rating? The fracking companies here in the USA. This corporate bailout move is to save a leveraged, debt-ridden house of cards from collapsing. As if these fracking bonds moved from BBB minus to the junk bond category, regulated banks would be forced to sell them, creating a death spiral, which wouldn't stop until only the most efficient, profitable, and robust fracking companies in the US survive. That would be how the normal course of things would go, but we are giving them an obvious bailout, and this Washington Post article sums it up nicely. Fracking needs a shakeout, not a bailout. So I'm telling you, friends, this all comes down to one thing and one thing only: oil. Last week, when oil prices dropped to the $31 level, the American fracking companies were in trouble. Well, as of yesterday, it was down another $10 to $21. The American frackers are on their last drip of oil, and it's exactly why Trumpster is looking to pull out his ultimate weapon, the NOPEC Bill Bomb. This specifically refers to the No Oil Producing and Exporting Cartels Act, NOPEC, which was last threatened in October of 2018. And why was it threatened last? Well, the Saudis had enabled the oil price to remain above the key US $70 per barrel level since January of 2018, when it first hit the key mark. And any sustained price above US $70 per barrel was and is regarded by the current presidential administration as being in an area where the benefits to US shale producers of higher prices are outweighed by the relative damage done to the US economy. Well, back then we won. As we can see, after we threatened the NOPEC bomb, prices came back down to levels the US was most profitable at. But then they kept going down to levels we didn't like. And then you know the story. All the oil countries made pacts, OPEC, led by the Saudis, America, and kind of Russia. And they came back to those $60 to $70 favored US levels. But obviously today we have another oil price war, but this time it isn't about high prices, it's about low prices. So will the NOPEC bomb even work? Well, it is our ultimate power play, and this is what it does. NOPEC would make it illegal to artificially cap oil and gas production or to set prices, as OPEC and Saudi Arabia currently do. So it's a direct blow to the Saudis, of which all our recent past presidents have been oh so friendly with, bipartisan, and it began with Nixon. It would also do something against the other big player, Russia and Vlad. NOPEC would prevent them from using OPEC Plus in their oil chess game. Traditionally, OPEC doesn't include Russia, while OPEC Plus expands the alliance to 24 member countries, including Russia, and it was formed in 2017. And since the formation, Russia has been using this alliance to manipulate, dropping in and out, talks breaking down, and more. Well, NOPEC would prevent them from ever reviving this alliance, and if they did, they would face consequences and deep sanctions from the USA. But let's get back to the Saudis, as the bill would be a major breakup with them. It would most importantly remove the sovereign immunity that presently exists in US courts for OPEC as a group, and for each and every one of its individual member states. This would leave Saudi Arabia open to being sued under existing US antitrust legislation, with its total liability being estimated US $1 trillion of investments in the US alone. Yeah, if you didn't know, the Saudis own a ton of stuff here in the US. Shoot, they are even one of the largest shareholders in Uber. So the US would then be legally entitled to freeze all Saudi bank accounts here in the US, seize all of its assets in the country, like the Uber shares, and then halt all use of US dollars by the Saudis anywhere in the world. And then if it came down to it, the US would then go after Aramco and its assets and funds, as it's still a majority state-owned production and trading vehicle. Saudi Aramco is the world's most profitable company. In 2018, it made more profit than Apple, Google, and ExxonMobil combined. How has a small nation like the Saudis, whose population is only about 33 million people, have one of the biggest and most valuable companies in the world? It's because the US has handed them it on a golden platter since the 70s, and the NOPEC bomb might really be what's needed to shake things up. And here is the thing, that bill was almost passed early last year. It made its way all the way through Congress to Trump, but his support for it was in question. Well, guess what? Trump vetoed the bill, and then in March of 2018, just after the bill was in Congress, the Trump administration okayed nuclear energy transfers to Saudi Arabia, which got Congress all ruffled up. So this is a sticky situation for Mr. Presidente. There is a tool which could actually save the US fracking companies without having to perform a full-on bailout, but that would mean the eventual collapse of the US petrodollar. And a collapse of the petrodollar system means a collapse of the US dollar in its current global form. The current financial system, in my opinion, has overshot and it will collapse, leaving a path of fire destruction in its wake. Is crypto and Bitcoin immune? Well, let me try to explain. It's not. Finance 1.0 has its greedy, grubby tentacles deep into the markets. We all know what happened with BitMEX during the flash crash. And guess who is CEO and founder who has access to everyone's positions on the exchange? Kind of like a casino who has access and eyes on everyone's cards in the casino, even if they are covered. Arthur Hayes. Where is he from? Where did he work before? Well, this 2018 Bloomberg article tells it like it is. Bored with banking, this former Citi trader went full crypto. Yeah, Arthur was a former equities and derivatives trader for Citibank, and before that, Deutsche Bank. Now, do you think he left Finance 1.0 and that world behind? No, he did not. I guarantee he was using his BitMEX profits and funneling them into large positions in the stock market. And that means if we have another tumble, like a big one in Finance 1.0, another death spiral will come from BitMEX, as they need to cover their positions in Finance 1.0. It's obvious that happened last time, and it's obvious it could happen again. But what everyone needs to realize is this: Arthur Hayes and BitMEX, they will go down with the Finance 1.0 ship, selling their accumulated BTC for cash to cover their Finance 1.0 positions, to holders like you and me who won't sell. And BitMEX, it could go under without any BTC, which will hurt in the short term, but in the long term is exactly what needs to happen. Cheers, I'll see you next time.